What is up guys, welcome back to the channel. XLF, the Financial Select Sector SPDR fund, tracks the performance of large financial stocks. The index includes securities of companies from diversified financial services, insurance, banks, consumer finance and similar industries. Their top 10 holdings consists of over 50% of the fund, and last week we already looked into a few largest banks from it. These were Bank of America, Wells Fargo and Citigroup. So today we are going down the list and taking 3 other picks. These will be Morgan Stanley, ticker symbol MS, Goldman Sachs, GS, and Charles Schwab, ticker symbol SCHW. In order to make the comparison possible, we will be looking into 8 different factors: analysts' price targets, price to book ratio, annual revenue growth, price to sales ratio, return on equity, last 4 quarterly earnings results, current ratio, and dividend yield. The best company under each factor will get a point, so it is possible to have from 0 to 8 points. And in the end, the stock with the most points will be considered the winner of this comparison. I hope that the rules were clear, so let's begin. First factor are the analysts' price targets. As investors, we want to check how far the current share price is away from the average target of analysts. If the current price is under the average target, we will consider the stock as undervalued, and in the end, a company with share price is furthest away from the average target to the lower side gets a point for this factor. For Morgan Stanley, we have 21 price target of analysts. They range from the lows of $79 to the highs of $117 per share. The average is at $91.58 and the current share price is at $89.60. So there is around 2.2% room for the current price to reach the average target of analysts. For Charles Schwab, we have 15 price targets of analysts. They range from the lows of $68 to the highs of $93 per share. The average is at $79.83. And the current share price is at $72.44. So there is still around 10.2% room for the current price to reach the average target of analysts. For Goldman Sachs, we have 23 price targets of analysts. They range from the lows of $330 to the highs of $484 per share. The average is at $390.14 and the current share price is at $367.31. So there is around 6.2% room for the current price to reach the average target of analysts. Results for the analysts' price targets factor are in the table, and with the highest percentage for growth, Charles Schwab gets the first point. Second factor is the price to book ratio. It is calculated by taking the current share price and dividing it by the book value per share. The formula suggests to be looking for a company with a low market cap and a high book value. So in the end, the stock with the lowest price to book ratio gets a point for this factor. Morgan Stanley has a price to book ratio at 1.7. Price to book for Charles Schwab is at 3.01. And Goldman Sachs has a price to book at 1.48. Price to book ratios are in the table, and with the lowest value, Goldman Sachs gets the first point. Third factor is the annual revenue growth. As investors, we want to find that the revenues of a company are on a steady increase. We will take a look into the results of the 4 most recent years and compare them one by one. If revenue was on the increase from one year to the next, we will consider it as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end the stock with the highest sum gets a point for this factor. Annual revenues for Morgan Stanley. And going into 2018 there was an increase to $40 billion US, then into 2019 we had an increase to $41 billion, and going into 2020 there was again an increase to $48 billion. So with 3 increases in annual revenues we have a sum of 3. Revenues for Charles Schwab, and going into 2018 there was an increase to $10 billion US, then into 2019 we had another increase to $10.7 billion, and going into 2020 there was another increase to $11.7 billion. So with 3 increases in annual revenues we again get a sum of 3. Annual revenues for Goldman Sachs, and going into 2018 there was an increase to $35.9 billion US, then into 2019 we had a decrease to $35.4 billion, and going into 2020 there was an increase to $41.46 billion. So with 2 increases and 1 decrease in annual revenues we have a sum of 2. Results for the annual revenue growth factor are in the table, and with sums of 3, both Morgan Stanley and Charles Schwab each gets a point. Fourth factor is the price to sales ratio. It is calculated by taking the company's market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and a high result in sales. So in the end, the stock with the lowest price to sales ratio gets a point for this factor. For Morgan Stanley, the price to sales is at 3.05. Price to sales for Charles Schwab is at 9.85. and Goldman Sachs has a price to sales at 2.43. Price to sales ratios are in the table, and with the lowest value, Goldman Sachs gets another point. Fifth factor is return on equity. It is calculated by taking the net income and dividing it by the shareholders' equity. A high ROE shows that the company is well managed and that money from investors are efficiently handled. So in the end, the stock with the highest return on equity percentage gets a point for this factor. For Morgan Stanley, the return on equity is at 13.93%. Return on equity for Charles Schwab is at 9.74%, and Goldman Sachs has a return on equity of 15.64%. Return on equity percentages are in the table, and with the highest value, Goldman Sachs gets another point. Sixth factor are the last 4 quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts. So earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4, and in the end, the stock with the highest sum gets a point for this factor. We have quarterly earnings for Morgan Stanley, and Q2 of 2020 beat expectations, Q3 beat, Q4 beat expectations, and Q1 of 2021 beat. So with 4 beats in quarterly earnings, we have a sum of 4. Earnings for Charles Schwab, and Q2 of 2020 beat expectations, Q3 beat, Q4 beat expectations, and Q1 of 2021 beat. So with 4 beats in quarterly earnings, we again have a sum of 4. Earnings for Goldman Sachs, and Q2 of 2020 missed expectations, Q3 beat, Q4 beat expectations, and Q1 of 2021 beat. So with 3 beats and 1 miss in quarterly earnings, we have a sum of 3. Results for the last 4 quarterly earnings factor are in the table, and with sums of 4, both Morgan Stanley and Charles Schwab each gets a point. Seventh factor is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to find that the company is able to cover its debts with assets, but also that they are actually being leveraged. So in the end, the company with the highest current ratio between 1.5 and 3 gets a point for this factor. Morgan Stanley has a current ratio at 1.78. Current ratio for Charles Schwab is at 0.39, and Goldman Sachs has a current ratio at 1.61. Current ratios are in the table, and with the highest value under 3, Morgan Stanley gets another point. The last factor is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. A high dividend yield may suggest that profits are being shared with shareholders, and that is a great passive income source that we as investors are looking for. So in the end, the company with the highest dividend yield percentage gets a point for this factor. Morgan Stanley is paying an annual dividend of $1.40 per share, which is a yield of 1.56%. Annual dividend for Charles Schwab is at 72 cents per share, which is a yield of 0.99%. And Goldman Sachs pays an annual dividend of $5 per share, and that is a yield of 1.36%. Dividend yields are in the table, and with the highest percentage, Morgan Stanley gets 1 more point. We can calculate the results, so Morgan Stanley has 4 points, Charles Schwab 3, and Goldman Sachs also 3. This means that with 4 points, Morgan Stanley is considered the winner of this comparison. And that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. Now there's a question for you, is it now the time to be buying financial stocks? Share your views in a comment below. If you are interested to know exactly when I buy or sell in a stock, then consider the options on Patreon. Last week I already had a comparison on 3 other large bank companies, and we have 39 weeks worth of investing with the Revolut stock portfolio. If you are interested in any of those, then click on the video current on the screen. And that was it from my side, thank you for watching, and I will be seeing y'all in the next one.